First and foremost, thanks to everyone for joining us on today's webinar, Shopify Sales Tax, Are You Doing It Right? I'm just going to provide a quick introduction. My name is Jeff, and I'm the head of marketing here at A2X. But you won't be hearing from me very much during this webinar. You're actually going to be hearing quite a bit from Christy Cox, who is VP of Client Services at Nimbl, and has been incredibly generous in sharing her expertise with us and everyone in attendance for this webinar, but also the video on-demand webinar that you can find on YouTube. So Christy, I'm actually going to give you a quick second to introduce yourself as well as the Nimbl team.
Yeah, thanks, Jeff. As you said, my name is Christy Cox. I am the VP of Client Services here at Nimbl. I do have a background in accounting. I have a bachelor's and a master's in accounting, and grew up in the world of finance and then transitioned into entrepreneurship a little bit later in life. And I came to Nimbl about 3.5 years ago, I think. Nimbl is a full service accounting team. We are a fully remote team, and we offer full-fledged financial and accounting services to small businesses, typically between $1 and $10 million in revenue. And e-commerce is one of our main verticals that we do like to service. And so we do offer a full suite of services for all e-com related businesses, to include accounting, advisory, sales tax, FP&A services, and income tax services.
Amazing. Cool. Well, thanks again so much for joining us today. We have a lot to cover, so I'll just get through the agenda and then I'll pass the mic back over to Christy. Today's webinar, we're going to cover an overview, sales tax compliance on Shopify. We're going to talk about understanding sales tax nexus and its impacts. We'll talk about the risk of non-compliance versus compliance. You'd be surprised to note that this is, an internal struggle that many business owners go through on an annual basis. How to record sales tax correctly. And we've also already curated quite a bit of sales tax FAQs from a lot of the questions we receive at A2X, but also that Nimbl receives as well. And then audience Q&A. I just want to make note, though, that if you do have any questions, please feel free to ask, and we'll try to address them as they come up throughout the webinar. This webinar is targeted towards businesses that are located and selling in the US. That said, if you are selling into the US, I'm sure that there's going to be some great nuggets for you here as well. And this is the obligatory, the information in this webinar is for general use. So if you have any tax-related questions that are specific to your circumstance, please, we implore you to consult with a tax professional. The Nimbl team is fantastic. So they're one great resource of many. You can find others on the A2X partner directory. So Christy, without further ado, I'm actually going to pass the mic on to you to chat about sales tax compliance for Shopify merchants.
Sure. Thanks, Jeff. So realizing that Shopify is an e-commerce platform, a lot of this is geared towards the e-commerce related industry, but a lot of this is also applicable across multiple industries. So the first and foremost, one of the things to recognize is that sales tax is actually a state and a local tax. So it's not applied at the federal level. Some states don't even levy sales tax. So you may have income tax in some states, but you won't have sales tax in those same states. Some products are not taxable, or they may be taxed at a different rate than other products. Grocery is a really important item in this category. It's typically taxed at a much lower rate, a 1 or 3% tax rate, as opposed to a general state rate, which they usually range between 5 and 8%. So rates can vary by location, they can vary by products, which makes it a very complicated topic that everybody has a little bit of interest in. Sales tax can also be charged can be charged on destination or origin. So destination is just the ship to address, and origin is the ship from address, and that's very state dependent as well. Most states are destination based, but there are a few select origin based states that will charge state sales tax based on your ship from address. And the last fact really on the slide is about the two main types of nexus that we're going to talk about today, and that's physical and economic nexus. There are four different types of nexus. The other two types are called affiliate and click-through. That's not really the focus of this slide, but it's important to note that those do exist. And we'll talk a little bit more about those in a future slide, but how you register with the state is really dependent upon the type of nexus that you have realized in that state. So another important factor that relates to sales tax and how it's charged and who charges it is the sales platform and versus the marketplace facilitator. So sales platforms can include, we're talking about Shopify in this case. It can also include like WooCommerce, BigCommerce, and other platforms that you sell on. On these platforms, the burden actually rests with the seller to both collect and remit sales tax to the state. So in this case, the platform doesn't collect it. You actually are responsible for collecting and paying the state. And typically how you would file if you're selling on these platforms and collecting or remitting is that you can use a third-party provider or a third-party service provider to file and handle that for you, or you can handle it yourself. The other type of sales platform that many e-com businesses sell through are what is known as a marketplace facilitator. Amazon's obviously the most common one here, but Etsy and there's a few others that are applicable. Marketplace facilitators actually will generally collect and remit sales tax on your behalf. So your sales, and what another important note here is that what you sell on there, even though they're collecting and remitting those payments on your behalf, may count towards the thresholds that require you to file in each state. So even though they take on the responsibility and they bear the burden in this case, you may actually have to include those sales in your calculations to determine if you need to file in a particular state. And so I think this trips up a lot of entrepreneurs in that they think because they're selling on a platform that's handling this piece of the business for them, that they don't have to include those sales. And so you may exceed an economic threshold in a state just by selling through Amazon, and be required to register and file in that state, even though they're handling the collection and the payment of the sales tax. So
Totally. And I think what's interesting as well is like when we think about the facilitator tax, like we know that these platforms aren't infallible. So that's why we always recommend accurate accounting as kind of a check and balance to make sure that everything is done accordingly, so there are no surprises in the future. I'm sure you feel the same way at Nimbl, correct?
yes, absolutely. Even if you're using a third-party service provider to handle your filing your sales tax returns and collecting payments, we always recommend that you have an accountant to look over it and to reconcile those amounts at the end of the month.
100%.
So what Shopify merchants need to know about sales tax compliance? Again, and I repeat this because I've heard it more than one time. Shopify is not required to set up, collect, or remit tax on your behalf. So if you're using Shopify as a platform, it's your responsibility to actually handle these items on your own. Setting up for sales tax in Shopify may be different for those on Plus or on a basic subscription plan. Plus actually has some options that connect with ABA tax. They actually do have Shopify tax now, which is it's a growing program. And I've seen a lot of changes over the last 4 to 6 months with that program. I think it'll probably continue to grow as they go forward as well. So the setup and how you handle calculation of those taxes and the payments can look a lot different on those two the two versions of that platform. So understanding Nexus, I think this is actually a really big topic, and I'll try and spend a few more minutes on this. Again, in this webinar, we're really going to focus on 2 different types of Nexus. Physical Nexus means that you have a physical presence in a state, whereas economic nexus depends on the amount of sales and whether that's dollars or transactions within a state. The types of products, the threshold, and the initial filing dates are all going to vary widely by state. So grocery is taxable in some states, it's not taxable in others. In some states it's taxed at a reduced amount. So it's really important to have a good understanding of whether or not your product is taxable. Physical products are a little easier than intangible type products, but it's something that you should have a discussion with your accountant about, is whether or not what you're providing isn't actually a taxable service or product. The threshold calculations and the filing amounts also vary widely by state, and they may or may not include those marketplace sales. So if you're selling a widget and you sell it on Shopify and on Amazon, one state may require you to just calculate the amount for economic nexus dependent on the sales on Shopify, and another state may require that you add the total of your sales with Shopify and with Amazon together and determine whether or not you've surpassed the economic threshold by doing that. Typically, if you are surpassing economic threshold in any states, that means you should register and file for sales tax. But we will talk about the risk versus compliance and cost of compliance in an upcoming slide. So I do want to touch here on physical versus economic nexus. Again, physical nexus is having a physical presence in the state. That may mean an employee, that may mean you, it may mean your business partner, and it may just mean you have inventory that's being held in a state. So if you're using a third-party fulfillment program, then you may have inventory that's being held in a state, and that's going to give you physical nexus in that state and require that you register, collect, and pay sales tax in that state. Typically, having physical nexus in a state actually is going to require you to file or to register as a foreign qualified entity, which also means that you would have to report and file income tax in that state. So that's a little bit different than economic nexus. Economic nexus is just measured by the amount of sales that you have into a state. And so that can be a dollar amount, or it can be a specific number of transactions that you have into any given state. If you surpass an economic threshold in a state, you only have to file for sales tax. This is much easier. It's much cheaper from a compliance standpoint, and just in general, it's less stressful to have economic nexus over physical nexus in a state.
Speaking of economic nexus, Christy, we do have one question, and I know you're going to address it a little bit later as well, but I thought I'd flag it right now. How do you know when you surpass the economic nexus? How do we find out the limits and tiers?
So you can do your own research, which is I typically recommend people go to Sales Tax Institute and look at, they have a really great chart on there, and you can take a look at that. Or you can connect with a third party service provider, whether that's someone like Nimbl, who's a full-fledged accounting and financial service provider, or you can connect with one of the many software and sales tax specific providers out there, and they can help you determine if you've surpassed that threshold in any state.
There's so many different permeations, right? Like depending on your business, depending on the types of products that you sell, like the locations, it's it can become quite complicated. Great.
It can it can become really complicated really fast. I mean, as you can see, like in column 3, the thresholds for economic nexus they generally range from 100,000 to 500,000 in sales, and then anywhere from 100 to 250 transactions per state. And you have to monitor for both. So you may only have $50,000 in sales, but you had 500 transactions that equated to the $50,000, and that actually means you have had economic nexus in that state, and you do need to register to file for sales tax. So, even to be an accountant, I don't think I can put together the number of variations there could be.
That would be a whole webinar in and of itself.
Yeah, absolutely. Yeah.
So I think on this one, which I'm quite excited about, the risk of non-compliance versus compliance, because I can imagine that this is, like I mentioned earlier, an internal struggle that many business owners, especially early stage business owners, kind of go through. Yeah,
there's a lot of nuances that come with risk versus compliance versus cost of compliance. And as a business owner, it's something that, you have to make a personal assessment around and determine what you're going to tackle and what you're not going to tackle. Registration and filing can be really expensive in a state, but also not registering and not filing can be really expensive. So if you don't register and file in the specific time frame that the state's outlined, and again, that is also another key variance that is pretty broad across all 50 states. Some are you must register by the next day, some are you have 30 days, some are you have 90 days. If you don't, there are generally penalties and interest associated with the any amount of sales tax you should have collected in that period where you should have been registered and you should have filed during that time. So you wouldn't only be out the cost of the sales tax that you should have collected and didn't, you would also be out the interest and penalties. Now, I will say in my experience that most states are pretty lenient, and if you showed the intent to comply with the state's laws, most of them will waive the interest and penalties for the late filing. So they are pretty willing to work with you if you're intending to be compliant in the state. I would say that the other thing here is, there are certain risks that you should weigh. Like I said, in some states, grocery is not something that's taxable. And so you may want to weigh the cost of compliance versus the lack of risk in that case for registering and collecting with the state. So something just to think about as a business owner is what to do. So
I have an interesting anecdote. So I was at Ecommerce Fuel Live a few months ago, which is the largest community of 7- and 8-figure sellers in the world. They do an in-person event once a year, and coming from A2X, obviously, I talked to them about their accounting, and what I found is that those that had been audited had the tightest books. Because they had gone through the experience before. And I'm not necessarily saying that they were either compliant or non-compliant, but just kind of like having to go through the administrative burden of an audit in and of itself. There's quite a bit of cost associated to that as well. And most of them, given the fact that they were, I don't want to say burned, but burned from an administration standpoint, their operations were totally on point. Their accounting was on point. I'm sure that you've seen, many similar anecdotes.
Yes. And I'll even say, as a former entrepreneur myself, I always say that I know as much as I do because I've made as many mistakes as I have. So yes, absolutely. If you go through it one time, you don't want to go through it again. So you will button everything up. All the I's are dotted and all the T's are crossed. Yeah. I think we covered most of this while we were talking in the previous slide, but again, the registrations and filing costs, they do vary by state and by service provider. And so it's something that you'll want to take into account. And we'll talk about streamlined sales tax in just a minute, and that can help mitigate some of the costs that are associated with sales tax, but they are pretty hefty costs in the long run. And so it's just something that you have to plan for going forward. Interest and penalties, again.
Sorry.
You might be charged those on late filings or payments, and that's something that most states will waive with good intent. So
great. Streamlined sales tax, as you mentioned, we're gonna dive deep into this one.
Yeah, so 24 states actually now recognize streamlined sales tax or participate in streamlined sales tax programs. So it's 24 out of 50, but it is some help to a lot of entrepreneurs. And the effort here was really put forth in order to limit the risks associated to business owners or small businesses. And so in most cases, those streamlined sales tax will only charge one sales tax rate per state and one per jurisdiction. So you don't have the multiple rates that are usually associated with multiple jurisdictions and localities in the state. There are only, I'm going to skip to bullet point 3 just really quickly because I think it's important to note. There are only 5 CSPs right now, and that actually just increased. I think in the last 3 months, there were only 4 CSPs up till then. So a CSP is a certified service provider. So those are people that are or programs that can file returns for streamlined sales tax on your behalf. And so again, there's only 5. So you have to do a little research on that, and Nimbl can help with those services if you have questions. But the real benefit here is that with streamlined sales tax, the state will actually cover the cost of registration and filing in the state. And so that's a huge benefit where, I'll tell you, even from Nimbl's perspective, for a lot of the states, our fees range from $50 to $100 depending on complexity. So it can be a really big cost savings for a lot of entrepreneurs to explore the use of streamlined sales tax as an alternative to just registering directly with the state.
Okay. how to record sales tax correctly. I'll just kind of get us kicked off here on one of the areas in which Shopify merchants sometimes get tripped up. And that's kind of at the beginning of the process of recording sales tax. So if you're using QuickBooks, Xero, or any other accounting software, you're probably used to seeing the Shopify net deposit on the bank feed. But the reality is that that net deposit actually includes more transaction types than just sales. So it can include your shipping income, your sales tax collected, incredibly important, gift card liabilities, penny payments, disputes, so on and so forth. What we see a lot of the time when folks come to A2X is that they're recording those net deposits as sales, when really they should actually be breaking it out by the different transaction types. So they actually have an understanding of the sales tax collected, as well as all the other transaction types. So they have better visibility into the performance of their store. The ways that you can break this out, one is you can do it manually. So you can use a spreadsheet and pivot tables, or as mentioned, you can use automation technology like A2X. And effectively what A2X will do is it'll collect the data from Shopify and your other sales channels. It'll break out the transactions from a payout into their appropriate categories. So like I mentioned, sales, sales tax collected, fees, so on and so forth. And then it'll post that summary into your accounting software, whether you're using QuickBooks, Xero, Sage, or NetSuite, that'll match to the deposit so that you could reconcile it. But once you reconcile it in your accounting software, you'll have a really great breakdown of all of the different transaction types, including sales tax collected, which is a really great segue now into how you're supposed to record sales tax correctly, which I'll pass the mic over to Christy, who can talk about that a little bit.
Yeah, and I will vouch for A2X or that platform, making it a lot easier to record the entries into QuickBooks over doing a manual journal entry. And so just the accuracy of the information coming through is much greater when you're using the platform. So we see that pretty frequently as well, where the entire gross sales is recorded just as sales, or the deposit is recorded to sales. And that's not, like you said, that's not entirely accurate. Sales tax is actually a liability that you owe to the state. So it's something that should be recorded on the balance sheet as something that you owe and you will need to remit cash for at a future date. So it shouldn't even be on your income statement or your P&L. Sometimes we even see sales tax income recorded like as an other expense and income item below the net operating income. I've seen that a few times, and it shouldn't touch the P&L, but it's something that you owe to someone else, and it's not actually income to the business. And so we see that pretty frequently. You are just, like the second bullet point indicates, is that you're just a pass-through entity in this case. Like you're just taking the money and passing it through to the state. So you actually have, other than the burden resting with you and the responsibility resting with you, like that cash isn't technically yours. It's something that you're just collecting from one person and sending off to another person. So.
Awesome. So now that we've kind of gone through much of the nitty-gritty tactical parts of sales tax for Shopify, as I mentioned earlier, we've aggregated a lot of frequently asked questions that we receive here at A2X and Nimbl receives as well as it relates to Shopify sales tax. Once we get through this, we're going to then go into audience questions. So if you have any questions, please feel free to ask them throughout the section, and then we'll address every single question that we receive at the end of the webinar. So the first one, Christy, how does sales tax apply to dropshipping?
Yeah, there are actually two pieces to this. So, and I know drop shipping is a growing industry right now. So on the first half is that if you are registered in any particular state as being a reseller, and you can present that sales tax exemption certificate to the seller, and you don't have to pay the seller sales tax. Now, if you don't have the sales tax exemption or reseller's certificate in any state, then you will end up having to pay sales tax, and that's a cost that you need to pass on to your customers. Just include it as a cost of goods. So also, the same nexus thresholds apply to you as you're selling with drop shipping as they would as if you held the inventory and you sold it outright. So if you surpass economic nexus, you're going to be required to file and remit sales tax in the state, which means that you need to collect from the end customer and file and pay the state going forward.
Great. Do we need to collect sales tax on international sales?
Sometimes. So again, many other countries have sales tax very similar to what the United States has. I don't think they have nearly the same amount of jurisdictions, but you'll usually hear it referred to as VAT, HST, or GST. And so you may need to collect just dependent on those countries' particular compliance requirements. So I usually recommend connecting with another third-party service provider. This is not Nimbl's area of expertise, but we do have partners that can help us solve that for you.
So that's like a really good piece of information, right? Like if you're an international seller selling multiple countries, multiple tax jurisdictions, and you're working with an accounting firm, from our experience, many accounting firms in the US actually might not be able to support you with Canada or the UK or Australia, New Zealand, but you had just mentioned that you partner with other third-party accounting practices that can help with those jurisdictions. First and foremost, I'm correct in that summary of what you were mentioning.
Yeah, we don't partner with other accounting firms, but we do partner with other service providers. We partner with Avalar to help us handle any international sales tax issues, and so they'll let us know when our clients need to when they do have an issue that arises that will require them to file, and then we'll work with them to make sure they're set up correctly.
Amazing. So that would mean that you can take care of accounting from a global level, but it's just you're working with third-party providers as it relates to tax only.
Yeah, exactly.
Great. Super helpful. Thank you. What are the record-keeping requirements for sales tax?
Yeah, we recommend 7 years. That's the typical recommendation to keep any documentation related to taxes is for 7 years. Most of the sales like POS systems or sales platforms will keep a lot of that information for you. And so you don't have to manually collect and keep it yourself. A lot of the state platforms will also keep these sales tax filings for you, but some won't, including the state I live in, North Carolina. Some will not do that. And so we do recommend that you download, print, copy, save it in the way that works best for you.
Great, but also a bummer.
Yes.
So do you recommend using tax software?
Sometimes, yes. But we do recommend also having someone on the other end to reconcile that information. It's just the same as with your accounting overall. We always say garbage in, garbage out. So dependent upon the data coming in and how it's been set up and mapped, like we've seen a lot of instances where the information did not match what we would have manually calculated. And so we do recommend having someone handle the reconciliation on your behalf, but we also are big proponents of the efficiencies that can be created with the use of tax software. And this is a field I would say, like we're seeing a lot of growth in all platforms that we have access to, including Shopify. So like I said, Shopify has their own Shopify tax program, and we've seen tremendous strides made in that platform over the past 4 to 6 months, and I expect to see some more as we go forward. So
awesome. All right, now to audience Q&A. Thanks so much for tackling those. So our first one is to calculate the total sales in a specific state. Is there a tool, or does A2X or Shopify do for, or what do they do for consolidating and seeing the total sales from both Shopify seller responsibility and Amazon marketplace collects and remits to a specific state? So effectively, just to summarize, the question is there a tool or tech, or do the sales platforms do this? Do they automatically split out the sales by particular states?
There are some tools out there. To my knowledge, Shopify doesn't pull in Amazon sales and then add that to theirs in order to calculate if you've surpassed an economic.
I think it's more so if they're selling on Amazon, will Amazon record it in the appropriate state?
Yes, and because they do like I said, they'll handle the collection and the remittance on their behalf. So they will. And you can get that information from within Amazon, and Shopify is the same. You can pull a sales tax by state platform or sales by state report from within Shopify. So you can pull those reports. I don't know if it's intuitive to do so, but you can pull those reports from within there.
Fantastic. And I'm assuming if somebody's working with Nimbl from an accounting perspective, you will do that for them.
Absolutely. Yes. Yes.
I drop ship, and we have situations where the company we are drop shipping has met the threshold and has to charge sales tax.
Yeah. So like I said before, if you're registered in the state, you could get a reseller's exemption within that state. And then that you can present to them, and then they won't charge you sales tax, and you'll just be responsible for charging sales tax to your end customer if you have nexus in the state that you're shipping to or shipping from, depending on if it's origin or destination based. So if you don't have a reseller's exemption certificate in that state, then yes, they are required to charge you sales tax if they've surpassed it, and then you would just need to build that into the cost of your product to pass on to your customer. So
great. And then we did get another question, so which matches one that we got earlier. How do you calculate if when you need to register /file? And I'm assuming that means that relates to economic nexus. You had mentioned obviously working with an accounting firm like Nimbl, they'll do most of that research for you. But if you're doing it yourself, what was the source that you had recommended?
Yeah, I typically recommend going to Sales Tax Institute. If you do a quick Google search, it'll pop up. But they have a really good chart in there around the economic nexus requirements for each state.
Great. And we'll share that in the email with the webinar recording. And if you're watching on demand, that link will be in the description below. Awesome. And I did get one question that I think probably great to address right at the end. So can you clarify the difference between Nimbl and A2X and how to use each? So I'll cover the A2X part. So A2X is an application and Nimbl is a service provider. So as an application, A2X helps you automate revenue reconciliation from your sales channels into your accounting software. Nimbl, as a service provider, actually helps set up that whole process for you. And not only do they help set up that whole process for you, they make sure that the data and information is accurate. And then on the flip side, which is arguably the most important side, they help you interpret that data. So from a profit and loss perspective, balance sheet, tax liabilities, so on and so forth, they are effectively your accounting team that helps you make sense of your financial data so that you can make really informed decisions based off of it. And like, I don't want to use your positioning for you, but really Nimbl is there to help e-commerce businesses achieve financial success from an accounting perspective. Did I hit the nail on the head there, or am I missing anything?
No, that's exactly right. I mean, we operate as a full back-end, full financial services team, and we meet you where you're at. So the smaller businesses, you may just need a bookkeeper to help you keep your books every month. And we really pride ourselves on, freeing up the mental capacity of our entrepreneurs and allow them to focus on what's important. So focus on your business and propelling that vision forward in the way that you can. And we focus on the financials and the things that we're good at. But, we operate where as you grow and you might need, small business CFO services, or you might need some FP&A or income tax services. Like we have the capability to support you in any way that you need now and then in the future as well. So
awesome. Yeah. We're like a perfect partnership. We're your accounting team, and then the technology your accounting team uses.
Yes. We love A2X. So yes, absolutely.
Great. Well, Christy, I think that's about it for this webinar. I just want to say thank you so much for joining us and for sharing your expertise. Did you have any parting words that you wanted to provide to the audience as it relates to Nimbl?
No, I mean, yeah, thank you for being here. And again, if you need assistance and support in answering any of these questions, whether it's around sales tax or accounting needs, then yeah, please reach out. You can reach out directly to me. It's Christy@trustnimbl.com, or you can reach us through the website, and we're happy to help and answer any questions we can.
So thanks so much, everyone, for joining today's webinar. We wish you luck on your Shopify sales tax endeavors, and we hope to see you next time. Thank you and have a great day.
Thank you.